What's going on, y'all? Welcome back to the Bitcoin Stock Show, your weekly live stream on all things Bitcoin stocks. A lot of Bitcoin mining. We're going to break into maybe some of the micro strategies and the folds of the world in a little bit. Maybe Coinbase if Brian Armstrong graces us with his presence. But for today, we've got a banger show lined up with Russell Cann of Core Scientific, the Chief Development Officer, who has been spearheading, along with some of the HPC and AI team, their AI pivot. Now, for those of you who are unawares, don't know how you could be, because this has been one of the biggest news stories of 2024. Core Scientific recently emerged from Chapter 11 restructuring and have come out hot out the gate with an AI and HPC pivot to the tune of, I believe, 500 to 800 megawatts. And they have a multi-billion-dollar contract with CoreWeave, an HPC company, to basically retrofit some of their existing and in-progress Bitcoin mining data centers for HPC and AI load. Now, Core Scientific was at the, I would say, forefront of a lot of the AI pivots that we've seen recently from Bitcoin miners. They had their feet in AI and HPC a few years ago, even before it was a cool thing. And so Russell is going to be giving us some updates today on how that pivot is going, what have been some of the challenges of it, what have been some of the considerations, and what we should expect from Core Scientific as we go into the new year. And without further ado, I would like to add Russell to the stage. Russell, thank you for joining us today, man. How you doing?
Thanks, Colin. Appreciate you having me, man.
Yeah, absolutely. So, like I was saying in the intro, to kind of set the stage for this, I mean, this time last year, Core Scientific was emerging from its Chapter 11 restructuring. When I met you and Adam for the first time, I think in Hong Kong, the news was just starting to bubble up within the industry that Core Scientific would be emerging in the beginning of 2024. And out of nowhere, because people who are in the know and who are close to Core Scientific probably knew this was in the works, but out of nowhere, these CoreWeave contracts start coming out, right? And then all of a sudden, Core Scientific is an HPC and AI data center play, not just a Bitcoin miner. Where were the seeds of this? I mean, at what point in Core Scientific's journey did this become obvious that this was the next step for it? And how did the Chapter 11 restructuring maybe change that trajectory for the company?
So that's a lot of questions there. So you got to understand yeah. So Core Scientific is made up at its core of a bunch of HPC and data center guys that got into Bitcoin mining, and quite frankly, we didn't just pivot into AI. We started out while we were Bitcoin mining. We also started out as Ethereum miners. We had a lot of GPUs that we were running in 2018 at both our facilities in Marble, North Carolina, and in Dalton. In 2018, we also started the process with NVIDIA of creating a DGX ready data center at our Dalton facility. So we actually had a DGX ready data center there. It was all certified in 2019 by NVIDIA. In 2019, in the spring, we also started working with Brian and Mike and the guys at CoreWeave. They were very large Ethereum miners. And from 2019 through the end of 2022, we were running tens of thousands of GPUs for those guys at our Marble facility specifically. So CoreWeave pivoted, and actually their software stack is just fantastic in the AI world, but they actually have a pretty intense software team. Even when they were doing Ethereum mining and rendering services using GPUs, they had an impressive software stack. But anyway, their pivot really began in late 2022, but it happened in 2023 while we were in bankruptcy. And I'll tell you, you say, how did bankruptcy affect things? Really, what bankruptcy allowed us to do was, but prior to that, we were absolutely the most productive, public miner on the planet for years, right? Like we've self-mined, 30 or 40,000 Bitcoin. Our facilities have mined like 60 to 80,000 Bitcoin. I had to do the math over the years. That's a ton. So, but in bankruptcy, instead of just constantly growing, we were allowed to sit and really look at what our assets were, what our skill sets were. And CoreWeave, said, hey, we need a lot of power. We're with you guys for years. We trust you guys. We know you can perform, and we know you have a lot of data center experience. So that's when we started having those conversations. So coming out of bankruptcy a year ago, so excuse me, I guess it's January, 11 months ago, we had teed up the conversations around our Austin data center, and we're running 16 megawatts of H100s there for them in our Austin data center already. And that conversation really just kind of evolved. The guys at CoreWeave are very sophisticated, and they understand that application specific data centers around AI involve a very dense power base, and they understood that's what we had. And also, you have to understand that for AI, much like Bitcoin, your power is such a large piece of your operational cost, and us having such a large multi-state power footprint, the CoreWeave team understood that our power team and our pricing of our power was fantastic actually for operating costs. So, we had two things that really worked out pretty well on the power front, which was we had the capacity and we had the right pricing. And then on the technical side, we actually had the skill set. Matt Brown and his team, a lot of those guys come with decades of experience from HPE and from QTS and from back when X. So they come from that deep data center background. So, I guess you'd say 2024 wasn't really a pivot for us as much as it was a expand something that we already had. I'll say this too, most people don't know, right before going into bankruptcy, we had an AI business that ran from 2019 through 19, 20, 21, and 22. We sold that business to AMD right before going into bankruptcy. And so we sold that business off. We sold off our DGXs. All that was in preparation of going into Chapter 11, just to simplify ourselves so that we could get out of Chapter 11. So people talk about a pivot for us, and it's not really a pivot for us as much as we've always had these two business lines of Bitcoin mining and GPUs. It's just that it's always been which one is going to be the path that's going to be the most profitable, and which is going to be the most the highest and best use of our infrastructure. So, and right now, our growth piece, even though we're still a very large Bitcoin miner and we have growth plans in Bitcoin, as we've obviously made public with some of our announcements, but some of our real growth plans, at least over the next couple of years, involves around our HPC infrastructure. Long answer to a short question, but I've had a lot of coffee this morning.
No, all good, man. I love the context. Can we back up a little bit and go focus in on this idea of CoreWeave being born out of Ethereum mining? So I understand it per our conversation going into this that Core Scientific and CoreWeave kind of go way back based on that link. Can you talk a little more about the origins of CoreWeave as we know it today versus what it used to be?
Yeah. So, those guys, we got involved with them in the spring of 19. So, 5.5 years ago at this point. They were involved before that, though, as Ethereum miners. And specifically, it was Ethereum because of its relationships with GPUs. So they have a deep skill set over there when it comes to GPU hardware and TensorFlow and all of that. And throughout their years, that what they did with those GPUs kind of changed and morphed just based on the value of Ethereum and some other crypto things like they did things like rendering services and all that. But then as Ethereum moved into proof of stake, I guess you should say it created an opportunity for CoreWeave, to really morph a lot of their GPU fleet into that AI and offering AI workloads. And then that's how they've grown. But like I said, they have a very serious tech stack over there, and some bright folks have been doing that for years. But we've been involved with them for over 5 years now.
So talking about the deal specifically, there's been a lot of conversation about just what is the best way for Bitcoin miners to break into AI. And it seems like to start, a lot of companies have done something similar to what Core's done, where you kind of start with dipping your toes, leasing rack space at a data center or leasing computers directly and starting to provide some of that compute. But then obviously Core taking it a step further and deciding to retrofit some of its existing facilities. We've had a lot of guests on the show to speak to this strategy, some who have built businesses around this, like Thomas Arrow, now at Cathedral, formerly Kungsleden, or, they merged. But there's been a lot of discussion about how feasible this is at scale, how difficult it is. I think the things that often come up is the redundancies that you need from everything from power to cooling to network infrastructure for something like an HPC, an AI data center from tier 3 and up versus a Bitcoin mine. What have been some of the challenges so far conducting this retrofit?
So make no mistake, the skill set is incredibly different. the engineering you need, the architects involved, the technical skill sets to design the facilities is definitely very different. Outside of that, you just mentioned the supply chain as far as the redundancy pieces go. The core and shell are very similar, depending on how you Bitcoin mine. Now, Core Scientific, we don't, we do have some containers in the field, but most of our facilities are existing brownfield where we retroed an industrial complex, or they're purpose built, but they're buildings we call our Cathedral design. We're on Gen 4 or 5 of our Cathedral design. That Cathedral design actually started out as a data center itself, and then we stripped it down to become a Bitcoin mining data center. So in some cases, if we built new Cathedral buildings, we're actually retroing those back to a data center configuration. Mm-hmm. So they were a data center. We converted them to Bitcoin mining. We just converted them back as far as the design goes. In some cases, our industrial sites were actually building out inside those a data center. And in some cases, all we're doing is we're using the electrical infrastructure, the substation, the transformers, the switchgear, that kind of stuff. But we're building new buildings themselves on the pads that we have. So it really depends on what type of site it is and what its life previously was. And we're doing whatever's the most efficient and quick. We're turning on 200 to 300 megawatts of critical IT load in 25. We're doing the same thing in 26, which is a lot, by the way. That's more than any public company anyways. So in order to do that, you have to have the people, the engineers, the skill set, the team, the construction team. You have to have the supply chain. And you also have to be just ingenious in picking which sites you're going to do what with. In some cases, it's faster to build a new facility. In some cases, it's faster to retrofit. And by fast, I just mean efficient, time to market, time to get the rack space on.
Right. So on that note, what are the considerations for kind of turning in an underdevelopment facility like Muskogee into one of these premium data centers? Is that a little bit easier than taking one of the former Bitcoin mines, or is it just a different challenge?
It's actually easier. So the Muskogee site, which we announced groundbreaking last month, we have a 600 megawatt substation there that has 300 megawatts of actual transformers sitting on. We have a 600 megawatt substation there tied to a 1,000 megawatt ring bus, and we had poured the concrete slabs. And we'd actually bought a lot of the buildings for that site. We actually built some of those buildings out at our Pega site in West Texas. So that site there, when we announced that it was going to not be a Bitcoin mining site, but going to be an AI site, we're actually going to be building a new structure there. So we'll be building new structures there. Substation stays the same. The transformers and switchgear that we bought, those things will stay the same, but the structures themselves are going to look very different than what they would be if we were building Bitcoin mining there. But in that case, because the ground's flat and we didn't have any existing buildings there, it was easier to build on. In the case of, in Denton, we've already announced, that we're retrofitting Denton, but I just said we're actually retrofitting Denton. And that's because, we've built those structures and facilities within the past few years, and they were a data center design that we converted to Bitcoin mining. So it's a simple matter of converting it back to a traditional data center design. So that's two examples of one that's being retrofitted and one that's being a new build construction that's just using the electrical infrastructure.
So for the Pecos, Texas site, this brings me to a question that I had later for our discussion, but this is a good time to insert it. Mm-hmm. Will Core Scientific be doing this kind of mullet miner thing where you have part of the electrical load going towards HPC and the other part going towards Bitcoin mining? Will there be some sites where you have both going on?
That's possible, Colin. It's very possible, but that's not any plans right now. We're a mullet miner in that some of our sites are AI and some of our sites are Bitcoin. But, like right now, we just announced another 100 megawatts that we finished up in Pegas. We have room to expand out there. We have the pads, we have the equipment. We just ordered another ton of chips anyways, from Proto, from Block. And West Texas is definitely a destination for some of those. The West Texas site, if you haven't been to it, which a lot of people haven't because it's way out in West Texas, it looks from a facility perspective a lot like our Denton facility there outside of Dallas. It's the same kind of build, and we have that same really great uptime. Even though it can get hot in West Texas in the summertime, the way our airflows work out there keeps our efficiency and keeps our uptime as high as we want it to be. I will say out in West Texas, we do, with the power market like it is, We curtail if ERCOT needs it, the state of Texas needs it. We can curtail pretty easily, but otherwise we can run out there as much as we want to, no matter how hot it gets.
Yeah, the Cathedral design really lends itself to some incredible, heat management. If anyone of our listeners, if you've never been in one of these facilities, I got to tour the Denton one last year at NABS. Really appreciated that. It was really cool to see. And you walk into the hot aisle and it's insane. It's like being in a sauna, and then you go on the other side and it's cool, right? I mean, this was November, so it might be a little bit different in the summer, but the separation of the temperatures was pretty incredible.
People don't realize, for Bitcoin mining, if you give your machines enough volume of air, because it's all about moving volume of air. So that's what those Cathedral designs do pretty well. It's bringing a lot of outside air into a containment zone. And in that containment zone, you fill it with a lot of air so that the machines themselves can then suck as much air across the chip as they want. And then that delta T in temperature variant between the cold aisle and the hot aisle, moving that temperature off those chips and into the hot aisle is what really makes it fantastic. But if you do it right and you design it to move the volume of air you need to, it's amazing that even in the hottest days in Dallas or Vegas, Texas, which by the way are just as hot as anywhere on the planet sometimes, you can keep these machines running because you're able to have that delta T, that temperature variant across those chips to just make it work. So.
Yeah, and certainly the fruits of multiple iterations of these Cathedral designs, right? You mentioned there's you're on design 4 or 5 for these cathedrals.
We've been doing this a long time.
Yeah. So I want to put a pin in something that you mentioned about curtailment and come back to that, but I want to finish up on this mullet miner thesis just to get your opinion about this. For a miner like Core that is trying to do hundreds of megawatts of load at each site for HPC, does the mullet miner thing even make sense? Or do you just want to plow all of that into HPC?
No. So the mullet miner, it can make sense across a portfolio of sites, but in general, and it's all about what your load looks like. So so you're not going to build a site at the cost that it takes to run HPC and then run Bitcoin mining there. I mean, to build a site for HPC is $10 million a megawatt. To build a site for BTC is $500,000 a megawatt. So why would you spend $10 million a megawatt and then run BTC there? Similarly, your actual PPA, your power purchase agreement with your power company. Across Bitcoin mining, you use what's called a flex load contract. And that means you allow the utility company to come in and curtail you, or you curtail for the utility so many hours a year or when the utility needs it. And that's what makes Bitcoin mining so great for the grid, is the fact that it's a curtailable load and it's flexible. And that flexibility means it's like a pair of aces in the pocket of the utility engineers that have to manage that grid. They can always call on a Bitcoin miner to hey, power's cheap, run more, or hey, power's expensive, I need you to turn off. Whereas AI is a firm load, and that means workloads for HPC and for these GPUs, they need that load 100% of the time. Now, the give though is that an HPC AI workload can afford to pay more. So even though a Bitcoin miner says, "Hey, I'll be flexible, but I need the cheapest power on the planet," an AI workload says, "Hey, I need all the power all the time, but I'm willing to pay you more for it." And both of those have benefits to the grid. So that flexible load for a Bitcoin miner gives the engineer gives that engineering team has to keep the grid up, gives them a lot of flexibility. The same thing though with an AI that says, "Hey, I want a firm load for all of it, but I want them to pay you more." That gives your financial engineers more profit to help fund grid improvements. So if an AI workload is paying twice as much as say a Bitcoin miner would, and it still works for the AI workload, that's twice as much money that gets to go into the grid, especially if you're in, which most of America is, a regulated environment. There's only so much profit can go to the shareholders. That money has to be invested in the grid. So when you have a company that says, "Hey, I want a 100 megawatt data center and it's a firm load," that firm load is very difficult on the engineers that need to keep the grid going, but on the financial engineers, all of a sudden they have twice the profit to build new transmission lines, build new substations, build new transformers and switchgear that makes the whole grid more efficient. So when you upgrade 50-year-old equipment with new equipment, the whole infrastructure becomes more efficient. So both can work. Now, making both work on the same site is difficult because of what I just said, which is a firm load versus a flex load. It doesn't mean you can't do it. It is possible. You can take and say, "I'm going to have a 300 megawatt site that I'm going to do 200 megawatts of Bitcoin mining and 100 megawatts of AI, but you're having two different meters, two different kind of PPAs on that site. So it from a power perspective, Mullet mining on the same site is going to be difficult. Now, you could, and this is just in theory, you could, in fact, if you're trying to balance the load on the grid and your GPUs are going down, so you're running, say, inference, and it's making the GPUs go up and down a lot, you could, in fact, have Bitcoin mining run as a way to continuously use the load on the grid if you wanted to use all the load in order to help balance the load. But other than load balancing, I don't know why you would Bitcoin mine at the same site you would do AI. But load balancing could be a reason you would do that. But there you wouldn't put your most efficient miners. You would just put, some older generation stuff just to take the power load. But that would only be something where you're trying to help the utility grid balance the load on the grid. So because when you have inference, and inference is a little different from large language models, because large language models, they get going and you kind of know when they're going to come on and off. But inference is actually humans interacting and saying, hey, I want to use this agent, or I want to make this video, or I want to create this song. So inference is going to have human interaction, which means you're going to have GPUs going up and down all the time, which means your load could get out of whack if you don't have good management software that's managing the load balance on those GPUs. CoreWeave happens to have very good software for that, and it's because of Ethereum mining. So they were so used to balancing loads using Ethereum mining that they're very good at return on their assets is very good, which means when they put an expensive GPU, an H100, H200, or Blackwell into production, their plan is to have that thing running almost as close to 100% of the time as possible in order to get a good return on that invested asset.
I'm glad you mentioned inference, because I feel like a lot of people see AI and HPC and it's kind of this, homogenous glob of compute, right? Like we don't really, especially when coming from the Bitcoin mining side of things, sometimes we don't differentiate these things. Because in Bitcoin mining, you have hash rate, you liquidate it to a pool or directly to the network. So I want to return to that in a second, but I want to go back to this idea of curtailment and how it differs for Bitcoin mining versus HPC. You said that, did you say earlier that the Pecos, Texas will have AI development? None.
Not right now. It's not the plan right now. It's
Okay.
just right now that site is. So what I was saying is we're mullet miners in Texas we'll be mullet miners.
Right. Okay.
AI, one site in Pecos is going to be Bitcoin mining.
And that would be very difficult to actually put an AI data center there, right? Because of the nature of all of the renewable energy and intermittent energy that you have out there, and the fact that it's so far removed. Like, would it be difficult to build an AI and HPC data center there versus one like in Denton that's closer to a city center?
So it's not so much the type of energy, because you can get a firm load out there as long as you're willing to pay for it, and you can also solve for those kind of things with redundancy. Gensets and batteries. Batteries can go along. Batteries, by the way, are becoming industrial scale batteries. Actually, are becoming very cost effective for those kind of things. But some of the stuff might be how far are you from your user base. So you could easily do a large language model in Pecos. But doing an inference where you're trying to target a population center of Dallas would be more difficult because you're 400 miles away. So in the world of large language models, being close to your user base or being close to where your data is located is not as important, because you can move the data onto the site and you process the site over and over again, or you process the data over and over again, and then you send it out into the world. Whereas inference, you're interacting with a population center that's asking for things. So for like a West Texas site, it really depends on what you're doing, which you've heard us talk about building application-specific data centers, and Bitcoin mining is an application-specific data center. In the world of AI, you can actually build data centers that are better you can build GPU data centers that are better at large language models, are better at inference. Now, a large language model site located close to a general population area can also convert into an inference site once it's finished doing whatever large language models you're going to do. But if you have a large language model site that's really far from your population center, you would have to solve for some of the latency issues to make it work for inference. And again, when I say inference, for those that aren't unaware, inference, we're just talking about, where you're doing things such as, hey, make me a song that says Colin and Russell were chatting on a podcast so, and then the AI makes up the song, right? So an agent is talking to you, or an agent that is working, is doing some work, and is doing some work in the background, needs to spin up a GPU working on that. And we're going to see a lot more inference, because if you dive into it, you see a lot of your companies right now talking about that agents and AI, autonomous agents and AI are going to become we're going to start seeing a lot of them in 2025, and we're going to see them first in corporate America, because let's just take, for instance, you can have an agent that's very good at bookkeeping, or an agent that can help make someone in HR more efficient. So you can see agents that are used to make people more efficient in their work product. And then you have those kind of agents that are advertising. So you're going to see agents that make your advertising more bespoke for you. You're going to see agents that come in and are for entertainment, right? Again, making a song or making a video, or hey, here's a picture through my buddies. I want you to turn this into a little meme for me. So, inference though has human interaction, and because of that, humans are impatient. So for inference sites, you want them close to your population center, close to your centers where people are interacting, because again, we humans are very, we're impatient. So when I say I want my little app on my phone to do something, I want it to do it right now, not even half a millisecond later. I want to do it right now. So your PACUS or your Denton and all those kind of things, you really have to take a lot of those kind of things into account before you decide to put a lot of capital on the ground in one location or another.
So for these inference use cases, this is like AI becoming the new engine, so to speak, for an entirely new generation of applications on the web for every industry, right? Like this could be everything from a hospital modeling out certain patient outcomes. It could be, like you said, maybe some sort of agent somewhere for a company doing marketing research or producing marketing material. When you say inference, you're talking about specific workloads that humans execute at any given point in day using AI to augment their workflows or things like that. And when you're talking about a large language model, that's training the actual models, correct? Like that's okay. Correct. And that one is obviously the LLM workloads are steadier because it's just you have the model, you're training it on a data set, and it's going. Whereas the inference is going to be in flux based on how many people are using an application at any given time. For these data centers that Core Scientific is building for CoreWeave, what applications can we expect CoreWeave to offer? What services will they be selling with these compute loads?
Yeah, so they're a hyperscaler in the AI world. So in general, their clients are other large businesses that are buying compute loads from them. So I think they've already announced billions of dollars in contracts with Microsoft, and that's basically Microsoft buying hours and hours and hours of these GPU workloads from them. So, and then those end clients, let's just take Microsoft, because again, it's public knowledge that Microsoft's a big client of CoreWeave's. Microsoft in turn uses those GPU workloads, and they may use those GPU workloads to train large language models, or more importantly for Microsoft, more likely for Microsoft, they're going to be using them to run agents. And that is what you just said, where a large language model is actually the training itself, and it's going to create that little morsel of a software program that becomes independent and can answer questions for people or do things for people. So in general, though, for CoreWeave, their clients are other businesses that have either large language models or agents, or they're training AI, and they're paying CoreWeave for time on their compute. And then CoreWeave's software stack makes them very efficient at it. So when workloads come in, CoreWeave's software stack can help them determine where that workload is going to be most efficiently ran. In some cases, CoreWeave, and this is all public knowledge, in some instances, CoreWeave will dedicate whole sites to individual clients. So say a Microsoft will say, I want to buy all the compute in that location for 5 years. But in some instances, CoreWeave will just sell hours of compute to a particular, an AI company that's training AI models, and then they'll get paid for those, and then CoreWeave can pick which sites are going to be running those hours or those GPUs at.
Got it. So with regards to these retrofits, just a quick operational housekeeping question. When should we expect the first ones to come online? I know that Core Scientific in its investor presentation said like H1 2025 for, I believe, what was it, 100 megawatts? I have the investor presentation in front of me right here. I'll try to find it for clarity, but are we generally, should we expect it towards the end of H1 2025? What's the rough timeline here? If you can give it.
We're going to hit, at Core, we pride ourselves on our say-do ratio. So, and what I mean by that is when we say we're going to do something, we do it. So, yes, we're going to hit those 2025 operational numbers. and I think I've already mentioned this, we're going to be somewhere between 200 and 300 megawatts in 25, and then that same kind of number again. You got to think we've contracted right now for 218 megawatts with CoreWeave, of which 16 are running in Austin. So you got roughly 502. If you wanted to just split the baby and say half of it in 25 and half of it in 26, that's probably some pretty good math. I think our team though is going to do a good bit better in 25. Because we've already got all those things kind of ready to go. At this point, our entire supply chain for 25 is locked up, and we're just about done locking up our entire supply chain for 26. So, I have full faith that our ops team and our construction team is going to get all those things online. We're going to be recognizing or turning on a lot of compute for CoreWeave this year. Or excuse me, I'm saying this year is in 2025.
Yeah, totally.
It's almost Christmas, man. So this,
we're basically there, man. Everyone's checked out, myself included. So, what's life after CoreWeave like for Core Scientific? I mean, Core Scientific in its most recent investor presentation talked about hosting client diversity. What would be the next step after accomplishing these retrofits?
So, we were already in lots of conversations with clients, but it takes a long time. I mean, it's not going to take as long as CoreWeave because, like I said, we started with CoreWeave in 2019. It took all the way to 2024. But it takes a long time to go through what the engineering looks like, what a site looks like, agreeing on supply chain, agreeing on what rack space density is going to be. So those conversations aren't quick conversations. Those are long conversations. At Core Sci, we try to build application-specific data centers. So we actually work with clients to try to understand what their hardware is going to be, understand what their software stack is going to be. And by the way, those things change. So you get down the road on things, and all of a sudden it's changed based on some new hardware specs. We're currently building things at 65 kilowatts per rack. New stuff's going to be in the 120 to 150 kilowatts per rack. We've already seen at Supercompute, we've already seen announcements at the 400 kilowatts a rack. So when you start thinking about 400 kilowatts at the rack, you're talking about very, very dense things. So in general, though, we're working with clients at new sites and retroing some of our existing sites, and we'll be making those announcements as we come. But again, our say-do ratio is pretty high, so we like to have everything pretty much in the bag before we start talking about it. And the engineering aspects and the supply chain aspects, you want to make sure you have all those kind of things lined up and locked tight. You saw it kind of with the CoreWeave because we announced one piece and then we said, hey, there's some options for these others. And it just takes a while because it's not something you can engineer overnight. Like you can't just sit down and say, here's what all the data center looks like because, it's a very complex structure with a lot of complex redundant systems. And in different cases, depending on who the client is, the redundancy on systems is going to be different based on what their end user is. So if you're dealing with someone whose end user might, and I'm just going to say something like might be a U.S. government entity that needs to have, triple redundancy. And I'm just made that word up, triple redundancy. But like the level of redundancy, it might be different, which means your supply chain is going to be different, right? And also it might be that who your end client is may dictate the geography of where the supply chain comes from. So let's just say your end client is the U.S. government, and they have very specific supply chain constraints to say they don't want supply chain necessarily from some countries in Southeast Asia. So you have different supply chain constraints that you have to engineer around. So all those things are complex, but I think for Core Scientific, you'll see us announce new megawatts. You'll see us announce new clients as we zero in on some of the engineering and supply chain issues. And we're going to continue to grow our HPC business. And we're growing our BTC business as well, as we talked about the block prototypes that are adding some more exahash to our mining fleet. But I think you're going to see most of our growth in 25 and 26 coming from the HPC business, because again, to grow the BTC business, something we've been doing at scale now since 2017. It's not that it's not hard, it is, but we've been doing it for so long that, adding some more megawatts or adding some more exahash to the BTC world. I'm not going to say it's super easy for us, but we've been doing it so long, it pretty much is like, butter and toast. It's pretty easy.
Right.
Whereas the HPC growth for the whole planet is tough right now because it's having such dynamic change going on in that space.
Yeah, I want to get to some of those constraints here in a second, as well as financing, and then a quick note on Bitcoin mining for Core Scientific going forward before we run out of time. But first, quick word from sponsors.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, It's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com. All right, and we are back. So going into the financing side of things, CoreWeave has bankrolled the bulk of this retrofit for Core Scientific and this HPC expansion. When and if Core Scientific ends up becoming, super large data center in the HPC realm, what does that mean for accessing capital markets, maybe debt, and things like that has historically been very difficult for Bitcoin miners to access? Put another way, for future expansions, what kind of financing would Core Scientific tap into?
I think when we did this deal with CoreWeave coming out of bankruptcy, we really did not have access to capital markets. And there's a couple of reasons. One, we just came out of bankruptcy, Chapter 11. But two, we had a lot of constraints on us related to that Chapter 11 that related to accessing capital markets and accessing new debt and that kind of stuff. So we've since solved for those problems. In August, we did a convertible note that pretty much put the Chapter 11 stuff behind us. A few weeks ago here in December, we did another convertible note at a 0% interest rate with a 4% premium over the share price that day for conversion. So we now have access to traditional capital markets. We now have access to traditional financing for HPC and data center space. And, I'm not going to say we wouldn't accept another deal, but that deal with CoreWeave was a great deal within bankrolling it, but it also costs us a lot of our revenue, right? Because we're financing a big piece of that with credit towards off of the bill for the first 2 years. Whereas your traditional markets allow you to put longer amortization, lower interest rates on things. So I think as Core Scientific rolls into 2025 and 2026, you're going to see us access more markets that are traditional in nature for data centers and data center growth, which is going to be longer amortization, lower interest rates that you would find associated with large building infrastructure that has 20 and 30-year life. These buildings definitely have 20-year life. The electrical infrastructure, substation, transformer, switchgear has 30-year life. Even your redundancy, your generators, your batteries, your PDUs, those things have 10 or more year life on them. So the cooling systems have 15-year life on them. So I think you're going to see us access equipment financing and facility financing that looks a lot more traditional than what we did with the deal we did with CoreWeave. But again, CoreWeave knew that we had access to power, we had access to people, we had access to cheap power and good rates, we had access to supply chain. What we didn't have access to was money based on our Chapter 11 processes. So we cut a deal with those things in mind. It's kind of crazy to think at the time, though, that a large private company had better access to capital than a public company. It did, right?
I know.
But that's not the case anymore. So I think you'll see us leaning towards those more traditional finance models.
So what is the future of Core Scientific's Bitcoin mining arm? It sounds to me that getting into HPC and AI, assuming you can lick the problems and get the data centers up, there are so many more benefits in terms of what you just talked about, access to capital. You're seen as a lower risk, maybe business at that point. Bitcoin mining has always been viewed as higher risk, less so now. I think these stigma and other problems are starting to subside, especially with the incoming presidency and a kind of change in the culture. But at the end of the day, you're looking at a business that has higher margins, potentially higher growth rate, and better access to capital markets. So what does that mean for Core's Bitcoin mining business? Obviously, we've talked about the 15 exahash purchase from Proto. What can we expect from Core from that vertical going forward?
So, first off, our Bitcoin mining is extremely profitable. We reported last quarter, positive EBITDA from our Bitcoin mining and Bitcoin mining. So you touched on a couple of things that I think are hugely important. First off, some of the stigma around Bitcoin mining is gone. It's now widely accepted in the market. If you look on any financial Bloomberg, TV, they're running the price of Bitcoin the same as they are the USD or the British pound. So some of those things are definitely behind us. Some of the people around the power conversations are now behind us as people are understanding how Bitcoin mining can be a benefit to the grid. What is difficult when you look ahead of us is hash price. And hash price is how profitable it is to be a Bitcoin miner. Now, those of us that have, wallets, I'm sitting there looking at a couple of them on my desk. Some of those who have wallets with Bitcoin in them, we're all happy that Bitcoin's over 100 grand, right? It makes it really easy math. But, Bitcoin over 100 grand affects you if you're a hodl, but it does not affect the actual economics of mining itself. Because the economics of mining itself has also network difficulty in there. So I think that Bitcoin mining in general is going to become, the profitability of it's going to be based on volatility. So you have a volatile power price, you have volatile BTC price, and I think you're going to see Core Scientific riding that wave so that HPC kind of balance out a lot of our fixed costs for us and gives us a nice high margin on a fixed basis. And you're going to see our Bitcoin mining being used as an opportunity to make some outsized returns. If all of a sudden the U.S. government decides that they're going to start holding Bitcoin on its balance sheet and Bitcoin bounces to 200,000 overnight, then there's going to be a very high hash price for a while until the entire market has time to catch up to it. And by the way, it's going to be hard to do because you're now trying to compete for power in the world of AI. So for every site that you think normally would just go right to Bitcoin mining, all of a sudden it's being evaluated like Core Scientific's doing by saying, well, should I do AI there instead? So there is going to be some outsized returns possible with hash price volatility. So I think for Core, what you're going to see is nice revenues off HPC, very high margins for a fixed time off that. You're going to see us using that BTC volatility to goose our returns because, like I said, at this point we've been doing it so long, we're a very efficient Bitcoin miner and can do that. I'm going to say with very little effort, but we now have figured out that game and we know how to do it and we have all the systems in place to do it. So we're going to take advantage of that while we can. And that's kind of what this deal is with the proto miner, or should say with the chips from Block. We're able to take those chips and put them into machines and into facilities and structures based around what we think works in a very volatile hash price market. And there's nothing wrong with volatility. Volatility, the other word for that's profit, right? If it's volatile, it can be profitable. If it's volatile, it can also be risky though. But if you can figure out systems and structures to play in that volatile market, it can be a profitable game for you. So I think you're going to see us continue to play in that arena. I think you're going to see our invested capital, our heavy invested capital, our intellectually and people-wise is going to be on the HPC space, right? Because again, it goes back to we've been doing the BTC game since 2017. HPC we've been doing since 19, but we're really growing it. So we actually have an opportunity to grow there. Whereas we already have the chops and facilities to grow our BTC mining business in 25 or 26 as we want to. So right now, both are going to grow and we're going to be advantageous and take advantage of profitability when it comes.
Russell, last question, and I know we're running up against time, but you mentioned this kind of land grab scenario where power that otherwise might have gone towards Bitcoin miners now is going to go towards HPC or AI endeavors. How do you contextualize this idea that there is this kind of land grab scenario with power assets, with data centers, with the fact that the US really has done a very poor job of expanding its power capacity over the last 2 decades? Are we just going to eventually hit a ceiling, or do you expect that we're going to start getting serious about energy policy again and start deploying things like maybe small modular nuclear reactors, more nat gas power plants, things of that nature mean, where do we go from here to make sure that we can actually furnish all of this demand?
That's a loaded question. I think you're going to see yeah, I mean, you're asking for the future here. I think we're going to see the AI world actually creates better incentive for utility growth than the BTC world, only because the AI world, at least looks like from the data center perspective, is more fixed long-term growth, whereas BTC mining is a volatile animal, and it can move globally very quickly, right? I mean, BTC mining got its chops in China with the lift and shift because it moved literally across the country between rainy season and dry season. So Bitcoin mining can move so easily that it goes towards places where you already have overbuilt infrastructure, but it's not really there to support new infrastructure, whereas AI infrastructure can support new utility grid infrastructure. Because an AI data center, when you plop down $50 million a megawatt H200s, or excuse me, B200s, that $50 million megawatt hardware, you're going to want to leave there for 10 or 15 years. And 10 or 15 years, when you pay above average margin for power, can pay for the cost of new infrastructure. So I think we're going to see the world of AI drive new utility infrastructure. And it's going to be, we're going to see a bigger push into nuclear. We're going to see a bigger push into solar battery combo. We're already seeing that in China. That is, as the price of batteries comes down, you can actually deploy solar. You can deploy massive amounts of megawatts in solar very quickly, if you can also deploy battery to back it up and have the extra megawatts off of it. So we're going to see more wind, more solar, more battery, more nuclear, more nat gas. We have a lot of nat gas in North America. So you're going to see us, you can very quickly deploy, 150, 200, 250 megawatt nat gas generators. So I think you're going to see in the US anyways, and in Canada for that matter, new infrastructure being built for generation. Also, though, at least for the next 2 to 3 years, while that's coming online, you're going to see an absorption happen in markets where there is existing infrastructure that is underutilized, which is what Bitcoin miners have been very good at. So let's take Core Scientific, for example. We built out 1,200 megawatts of infrastructure, 1,200 megawatts of PPA, 1,600 megawatts of infrastructure at basically with no new generation. We went to places where generation was already there, where infrastructure was already there. We're converting, a big chunk of that into AI. So I think we're going to see some of that over the next, what's happened in 24, 25, 26, maybe even 27 and 28. What you're going to see is these data centers for AI absorbing where we have excess capacity. And by the way, this is important to note too. It's not like you say, let's just take our Denton facility. It's in Denton, Texas, but it's serving the Dallas market. I mean, it sits literally, 20-minute drive to DFW airport. So Denton, even though it's not in downtown Dallas, is close enough to Dallas that it can serve with an inference model the entire metro area of Dallas, which is 15 million people. So you're going to see, first off, you're going to see excess generation and infrastructure that's around those big, large population centers be converted to AI data centers for inference. Going further out, you're going to see them being converted for AI data centers for large language models if they're too far away. And then if there's infrastructure load in places where it just doesn't work because fiber's not there, or the utility grid is not fixed, but it's a flexible load, you're going to see Bitcoin mining grow there. So I think there's going to be a lot more investment in utility grid infrastructure. And now that Bitcoin mining has been around for a while, and now that the AI data centers are putting some real megawatt load on what is a traditional data center market, the utility grid market, the utility market is going to learn the economics of those and which ones benefit from what kind of growth and what kind of investment. So I think we're going to see that. And by the way, I keep talking about the US, but we're also going to see that same growth in Europe and in some cases Southeast Asia, like around Singapore and Malaysia. In Malaysia, basically to serve Singapore. You're going to see it in some instances in Australia. The Australian market is kind of isolated and small, so you only have a small population base of just the country of Australia. But I guess you can consider New Zealand too, but it's a small population base. But you're going to see that growth in pockets around the world where there is demand for compute. We just happen to be in a country where the demand for compute is not only driven by a lot of three-letter government agencies, but it's also driven by some of the largest tech companies on the planet.
Well, fantastic note to end on. Russell, really appreciate your time. This was a fun conversation. And just before we go, where can people find you, learn more about Core, all that kind of stuff?
Super easy. CoreScientific.com. You can also follow us, Core_Scientific on Twitter. You can follow us on LinkedIn. But our website kind of leads you all those places.
Fantastic. Well, Russell, thank you very much. Hope you all have a Merry Christmas. And to all of our viewers, Merry Christmas, Happy Holidays. Happy New Year, ringing in 2025 with a bang with Bitcoin over 100K.
Congratulations on that.
Take it easy, y'all.
Thanks, guys.